Hey, it's Rav. Welcome to the Everyday Investor, the hottest real estate investment show in the world. That's right, I said it. I don't care who knows it. We've got a fantastic show lined up. We're going to be talking about how we can make money joint venturing with the largest developers. I've got my good friend Darcy here. He's going to teach us all about that. He's from Graybrook Realty Partners. Remember, when anyone offers you any kind of investment vehicle, you always want to ask 4 questions to start. Number 1, what is the return on investment? Number 2, when do I get that return along with the money that I put in? Number 3, what is the investment amount needed? And number 4, what is the risk, the worst case scenario? We're going to go through numbers. You want to get your paper, your pen, all that kind of good stuff. The Everyday Investor continues in a moment. Thanks for watching.
The Everyday Investor has been brought to you by ProFunds Mortgages, Fixed Returns, Real Security. The Real Estate Center Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
For over 10 years, Strong-Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
At Here to Clean, we understand that inviting someone into your home is a big deal. All of our cleaners are carefully vetted to ensure we send the right person to care for your home. We offer a variety of cleaning services to meet our various clients' needs, from small office and vacation rental cleaning, post-renovation and move-in cleaning. We will arrange a team of professionals with the right skill sets to tackle your toughest jobs and get them done right. Email, call, or text us to discuss your unique needs.
Hey there, this is Anthony Maniaci. Here at Maniaci Sobel Altbaum, we're a law firm working for you in all facets of the law. My specialty is working in corporate commercial law and real estate, but we have lawyers that work in all other areas, including litigation and family. Our practice focuses on service with a personal touch, delivering in-depth legal advice and guidance to our clients, treating you as people, not as a number. You can reach us at maniacilaw.com.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
The Real Estate Center is one of North America's leading real estate firms, helping everyday people buy, sell, and invest in real estate. By leading with education, we make sure our clients have the know-how and confidence to make informed decisions, allowing them to reach their goals. Through our vast network of experienced advisors, the Real Estate Center is able to provide a full-service experience across the entire country. Whether you're looking for your first home, an income property, or commercial investment, we're here to help. Visit our website at therealestatecenter.com.
Hey, it's Rav. Welcome back to the Everyday Investor. Today we're going to talk about how we can make money joint venturing with the largest developers. My good friend Darcy's here. He is the Director of Capital Markets at Graybrook Realty Partners. Darcy, it's great to have you on the show.
Thanks for having me, Rav.
It's, I mean, we hang out all the time. We grab lunch, we grab dinner, but when we're talking business, I'm always grateful to have you on the show. I know you're really busy. With Graybrook, and I'm grateful to even be a part of Graybrook. I'm in many deals, and after a while, you guys said, "Hey, Rav, come on board and be a bit of a spokesperson." So
For sure.
thanks for that. But more importantly, how's Jan? How's the babies? How's life?
Life's great. Yeah, it's when you go from 1 to 2 kids, it throws a little bit of a wrinkle in the program. But you know what? There's nothing better, as you know.
Yes.
You know, you're a big family advocate of family time.
Yeah.
It's special. So it's been great.
And how old are they?
So
A girl first, then boy.
2 boys.
Oh, 2 boys. Okay.
Yeah, 2
Okay.
boys.
Yeah.
The
Of course,
oldest
Teddy.
The oldest Teddy is almost 3.
Yeah.
And then our youngest is named Sanders, named after his great-grandma's maiden name. And he's about 4 months, turns 4 months here pretty
beautiful.
soon. It's unreal.
Congratulations,
It's great. Thank
Teddy
you.
and Sanders.
Yeah.
And yeah, of course. I mean, we talk about it all the time. There's nothing more important than faith, family, friendships, and then of course, money can help. I mean, it's nice to go up to the cottage and enjoy them, and that
Sure.
costs some money, and to get up there, little petrol in the car and all that kind of stuff. But talk a little bit about why you kind of enjoy investing in real estate, specifically land development, and attach it to being able to do what you want to do, when you want, with whom you want. Talk a little bit about the kind of the philosophy of investing. I mean, there's people out there that do it just for the money. If you're doing it just for the money, it's not really going to serve its greatest purpose.
When we talk about investing, it's about creating that sort of, I guess, a bit of a work-life balance and the quality of life that ultimately you want. And, in my experience, I sort of studied economics and finance, and then went to grad school and was an investment banker. And sort of as I got to understand real estate investing, and then got exposed to investing in development and these joint ventures alongside sort of these large developers, I couldn't believe, one, the returns that you could generate in a pretty easy way, right? So obviously there's a lot of work that goes behind the scenes, and that's what Greybrook does. But you can really compound your wealth in a passive way. So for me, I'm going, well, look, if my time is very important to me, time with my family and also time with my colleagues and building our business and doing all these things is very important. There's no better way, in my opinion, to invest in real estate than in a passive fashion versus, some people say when you're buying a rental unit, you're buying yourself a job because you've got, who knows what can go wrong. So not only is it, are returns attractive, but it's a passive way to do it, and I can't really think of a better way to do it, to be honest.
Yeah, we'll talk about the returns in just a few minutes here, but kind of break down terminology for me. So when we say joint venturing, with the largest players out there, what does that really mean to joint venture?
Sure. So effectively what we do at Greybrook is we allow individual investors like yourself, myself, our families, and others
at home,
to access very large-scale development. So we create a structure, that being a joint venture, and through our investors and management at Greybrook, we provide typically the majority of the equity, it's called, in an investment. And then our developer partner, whether it be Tribute Communities, Stafford, Empire, would typically provide the minority of the equity. That equity goes to buying the land jointly with the developer.
Okay.
And then some of it can also be applied to soft costs. So that would be your sales and marketing expenses, sometimes planners, consultants, really anything to get a site shovel ready. Our contribution alongside the developer's contribution, and then the developer goes to work on our behalf to complete the project, whether it's 50, 70, 200 townhouses, single or multi-phase high-rise, or sort of your larger master plan communities where you're doing 300 to 1,000 homes. You've got a developer going to work for you in your capital every day.
Yeah.
And then on the back end of a completed project, you effectively split profits with the developer.
Yeah.
And that's typically how it works. So when I
Okay.
think of joint venture, that's the structure we're
So it
talking about.
sounds like, because you said, Rav and friends, Rav Darcy and friends,
Yeah.
we come up with capital, money.
Sure.
And we buy the land with it, and a little bit goes towards marketing. The developer puts in a little bit as well. But these projects are $400, $500, $600 million projects, and so the land. I think you have something what you call a capital stack, and maybe we can go through that. But the land portion of it might be 10, 15% of the $500 million.
Sure.
The developer is responsible for all the rest.
Kind of like that, yeah.
Okay.
So you know,
How would it work? Yeah.
It really depends on what you're developing, and your land cost could be, like you said, anywhere from 7 to really 20% of the cost of a project in totality. You know, one of the things that we like to walk investors through, just to try and understand, well, how is it that you can generate the returns that you do, and how does this actually work?
Yeah.
Is something that we call the capital stack.
Okay.
So, and it really applies mostly to a high-rise development. So in the capital stack, we think about the total cost to develop. And so typically how it works is our equity contribution and the developer's equity contribution would make up about 15% of the total costs in a development.
Cost. So can I write just an example of a total cost? Can we say 500 million?
Sure.
Is that okay? So if we say $500 million, you're saying the land value that both...
I think an easiest way to do it would be 100 million.
100 million, perfect.
Yeah.
That's why you're on the show. So
There
we'll
you
do
go.
$100 million, but I think that, and we're doing that to make numbers simple. That's probably one of Greybrook's smallest deals, if there was one.
Yeah, well,
Total
when you're
cost.
talking about high-rise projects in the city,
Yeah.
in the Toronto core,
Yeah.
very much would be well beyond that.
Yeah. But for numbers' sake?
It's not to say that we haven't done a project of that size. And for numbers' sake, simplicity purposes,
Beautiful.
round numbers.
I love it.
Simple. We simplify
Thanks
things.
for helping with that. So $100 million a total project.
Yeah.
And so Rav Darcy and friends, along with the developer,
Sure.
we're going to put in, you said about 15%?
So say 15 million of equity.
$15 million, okay?
Yeah.
And that goes towards the land and marketing.
Land and marketing.
Pretty much.
Sure.
Okay.
In a high-rise example, so if you go back to sort of your early 2000s, late 90s, banks used to lend on spec, basically lend to a project, and there was really non-existent sort of deposits. Where today you walk into a sales center, you look at the renderings, and then you put a deposit down, say I want that unit, and I'm going to put 5, 10, 15, 20% down.
Yeah.
So the next sort of 15% project cost would be made up of deposits. So typically, a bank won't lend construction financing to a project until about 70% of the units are sold.
70%.
70%.
So 70% of the end user is going to put deposits down.
Correct.
And that will equal another 15 million of the 100.
Exactly.
Okay, so I've got 15 million for us doing the land, 15 million from purchasers' deposits.
Exactly.
Okay, so I got 70 million left.
And so your remaining 70 million would then be traditional bank financing. So at this point, the developer can go to the bank and say, we have enough equity in the project, and the bank will say, there's enough deposits and enough sales that we feel comfortable lending to the project. So the delta would be construction financing from the bank. And so that's how you make up really 100% of your costs,
And
in
that's
theory.
the most beautiful word in real estate. I mean, that's leverage.
That is
right
leverage.
there. So we're putting in 15 million, purchasers are putting in 15 million, and the bank is giving you 70 million.
Correct.
We're going to go to a break here in about 30 seconds, but what is generally the profit margin on the 100 million?
So the example we give is a $30 million profit on that project.
So 30%, so $30 million, and this would take how many years roughly?
That's about a 5-year project.
About a 5-year project. So that's where we get the returns. It's $6 million on an annualized basis, and we're putting in 15.
Exactly.
Beautiful. Let's go to break. You also are beautiful. I'm talking about good, beautiful friend Darcy. I'm stumbling because the numbers are outrageous. You don't want to go anywhere. We'll be right back. Thanks for watching.
The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Center Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
ProFunds Mortgages and its affiliate Valor Capital offers expert service and funding solutions for builders and developers, offering first and second mortgages with a combination of institutional and private lending. ProFunds Mortgages and Valor Capital offer a full-service construction and development package with in-house engineers, developers, builders, planners, and the best of financial analysts. With the many years of experience and credibility, ProFunds and Valor would love to be your added value financial partner. Visit us at profunds.ca.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
For over 10 years, Strong Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
Like people, businesses have their journey, their path, sometimes straight, but more often evolving, growing, and adapting. And like people, businesses' needs change, creating the need for knowledge in areas like accounting, consulting, and tax. Areas critical to your continued growth and success, all part of the journey, and all part of what we do together with you. So that when your business has arrived, it's ready to keep going. MNP. Wherever business takes you.
Hey, it's Vitali, Rav's door and window guy. Here are 4 quick tips when choosing doors and windows for your home. 1. Get 2 to 3 estimates from a reputable vendor. 2. Choose the right manufacturer. 3. Make sure you have a warranty. And 4. Get professional installation. To book a free estimate, contact us at torontodoorsandwindows.ca.
Hey, it's Rav. Welcome back to the Everyday Investor. Today we're talking to Darcy. We're talking about how we can make money joint venturing with the largest developers. Darcy, thanks for coming on the show.
Thanks for having me.
It's always great when I can have close friends on here, but the friends that have great intellect. You've taught us kind of how it's broken down here.
Sure.
That basically on a $100 million project, if you will, Rav and friends, including the developer, we put in about 15 million of that. The next 15 million would be from purchaser deposits, and then you're leveraging 70 million from the bank. Now, that's why we entitled the show "The Largest Developers."
Sure.
Because I don't know if cousin Vinny down the street, wanting to do just a custom home build, is going to be able to get 70% financing from the bank.
Yeah, there's no question, right? And one of the things that we look at most closely and diligently when we're evaluating projects, even before we get to that level, is evaluating the developer, right? So, the criteria that we sort of need to see is that, yes, they have the ability to execute. They've likely done a project like this or many before. In many cases, they're multi-generational, so they have the expertise. But more importantly, are they well backed financially?
Yeah.
And ultimately, if you're an investor, you think, well, what's my upside? Great. So we know the upside is very good. But then you really want to know, what's my downside? And if you're working with partners that can withstand bumps in the road, can withstand turmoil, and are sort of built to last, then that's the partners that we're going to want to work with. And they're, to your point, they're exactly the partners that can get 70% financing on some of your largest scale high-rise developments.
At preferred interest rates.
Exactly, at preferred rates.
Yeah.
Guys that banks are competing to lend to at very good rates that you and I unfortunately couldn't get.
That's right. The partners are very important. It's not like we're doing several deals, one with each developer. We may be working with a developer such as Tribute that we may be doing 4 deals on at the same time. I mean,
Sure.
When you have a handful of developers that you trust, it's all about relationship. Then Greybrook Realty Partners is doing several deals with individual individual developers, not just like one piece of land with one developer?
It really depends on the developer partner. I think right now we have north of 40 projects on the go at various stages.
Yeah.
Whether that's detached homes, townhouses, or high-rise. And some partners we have 5+ projects with currently at various stages, and others we may have 1 or 2. So it really depends on the partner. It depends on sort of their area of expertise, or even if they're better at building a type of product more so than another. But the way we look at it is really a partnership, right? So yes, we're a capital source, and we have investors, and we provide capital and investment to these partners. We bring capital to the table, but we also add a huge amount of value when it comes to the execution of the actual development, which is a point that I think is often overlooked when people see what we do and how it works, and how do you guys add value? Exactly.
Yeah, I mean, you're really working on behalf of the investor. I mean,
100% we are.
And like I say, I'm in several deals, and that's what I appreciate, that you're working on behalf of the investor. You guys invest in the same deals as us. Same terms, conditions, all that kind of stuff. So we looked at this kind of what you called a capital stack, and so we said, okay, let's just, for an example, let's say the projected return was 30% on this 100 million, so that'd be 30 million. Now we are joint venturing, we're partnering with the developer, so it would be 15 million for the investors. 15 million for the developer. We're in for 15 over a period of 4 or 5 years.
Right.
That's where you get the annualized return. The first question, what's the ROI?
Sure.
The ROI would be 20-25% projected targeted returns. Correct?
Exactly. So in the example we gave, it's $30 million in profit. That profit, and again, this is sort of simplifying it a little bit, but would be split 50-50 effectively, 50% to the investors, 50% to the developer. And so 15 to the developer, 15 to Graybrook and its investors, and that's a double in 5 years or less. So our targeted return is just that, is to double an investor's investment in 5 years or less. And we only are going to do projects or bring projects to our investors where we can underwrite or meet that sort of targeted return profile.
And so with these big players, Darcy, is it them that are bringing deals to Graybrook? Is it Graybrook out there with their detective hat out there and sniffing around looking for deals? How does it work?
Yeah, that's a great question. And we feel like it's sort of one of the big edges that we actually have in how we source investment opportunities. So very rarely is it going to be a marketed, sort of competitive, broadly marketed, brokered project or opportunity that we're going to be buying with our partner. In most cases, we actually have this very privileged and we're in a privileged and lucky position where we get to sort of look into the pipeline of what our developer partners have in their inventory. So the projects they're looking at and or projects they currently own. And then we would joint venture them with them at a certain stage in the development.
And maybe we do 10% of them? 10, 15 deals? It depends on, they've got to be great deals, I guess.
Exactly. So I'd say 10% or maybe even less at times, but say 10%.
Okay, cool.
Yeah.
And so our targeted returns, what's the ROI? You ask, our targeted projected returns are north of 20% annualized. And when do you get that return? Well, it sounds like when the project's finished. So in this case, it would be 4 to 5 years.
Exactly.
And then, Darce, who is this for? I mean, we're talking about a $100 million project. We're talking about $15 million for land and marketing.
Yep.
Who is this for? What's the minimum investment?
Yeah, and I think this is one of the very unique things that sort of has been created is that it's really for just about everyone. The minimum investment's $25,000 in any given project.
Okay.
So we do this on a project by project basis. I don't know that I made that clear.
That's a good point.
We're not a fund.
Yeah. Okay.
Right. So we do it on a project by project basis. Minimum investment for a given individual's $25,000 in denominations of $100 there and above. So, we have dentists, doctors, lawyers, entrepreneurs, school teachers, up through to sort of high net worth families.
You mentioned, doctors, dentists, a lot of people have incorporations. Can we use incorporations? Can we use registered funds? Does it have to be just cash? What?
It can be any of them, actually. So a lot of people would invest using a corporation. People can invest under the personal name using cash. And one of the unique things, again, is the fact that you can use registered funds. So RRSP, TFSA, LIRA. So it allows you, and to your point earlier, these aren't cash flowing opportunities. So they're not on an annual or monthly basis paying you an income stream.
Yeah.
Your money's tied up for the duration of the project. And our projects can be anywhere from 2.5 years up through to 7+ years.
Well, I was going to ask you, what's, people watch and they say this is too good to be true. What's the risk? Well, that sounds like one of them is that the money's not, liquid. It's not just kind of like I can take it anytime I want.
That's right.
If I'm going to do it, then we're making a widget, if you will.
Exactly.
And so it costs money to do that. What other?
That's why putting it in a registered plan makes sense, because oftentimes these funds are locked up for a long period of time anyways.
Yeah.
So to have a longer term project in a longer term vehicle is a pretty good match for a lot of people.
Okay.
Yeah.
Any other, when somebody asks you any other risk, what would you say to that?
I think in development, especially when you look at Ontario currently, one of the big risks, and it always has been one of the big risks, is really a function of time.
Yeah.
Is our intentions are that for this project to be a 5-year project. Is there a risk that it could turn into 5.5 or 6-year project?
Yeah.
That's a real risk in development. Obviously we want to be on time and exceed projections in every case. But the reality is, if you're investing in this type of opportunity, you need to be comfortable with that timeline risk. But that's why we're there, to hopefully navigate that on your behalf.
Of course, but what your point is if I need this like 48 months from now, you said 4 years and I need the money out in 4 years, well then probably it's not the investment for me. But if I can, understand that it might be shorter, might be longer, my return on investment is purely based on profit and splitting with the biggest developer, so it might be more, it might be a little less than the projected returns. No, I understand that. Time flies when we're having fun. We're going to exit here pretty soon. But before we do that, talk about the difference between some of our, like if we're doing 100 townhomes, that might be a 2-year project, as opposed to a master plan community that might be a 10-year project. What's the difference? What are your personal thoughts on it?
Yeah, so I think the fact that we do this on a project by project basis makes the discretion the individual investors what they want to invest in, and sort of the additional benefit is that they can build a portfolio as they see fit. So they could do short-term projects, longer-term projects, high-rise, low-rise, or a blend, different geographies. So it's an interesting way to be able to build a portfolio inside of a development strategy.
Yeah.
I would say that, in most cases, people would want a shorter term project.
Yeah.
Just because they feel like short term is the least amount of risk.
Yeah.
But the reality is, in development, in almost every case, time is your ally. And if you're in longer term projects, likely you're buying the land at a much lower price, taking it through approval process, and then capturing a lot more upside. So I believe that, there may be slightly less risk in longer term projects with more upside.
Yeah.
But having said that, I think people should have a blend of short term and long term and different product type to really have a strong portfolio.
Listen, I appreciate you so much being on the show. I want to have you back because there's just so much to cover, but I appreciate how simple you make it and break it down. Thank you so much, Lars, for being on the show. Appreciate it. And thank you, the viewers at home, for watching. Without you, we wouldn't have a show. For more information on this show or any others at The Everyday Investor, please visit theeverydayinvestor.info. Remember, when it comes to money, live simply, give generously, but always invest. Thanks for watching, honey. I love you. I'll be home soon. Ciao, everyone.